Singaporeans with 9 different retirement dreams.
My retirement dream is to live and travel on my own personal yacht.
My dream would be to live in a place like Bali, where I can live near the sun, sand and sea every day.
I want to pursue my passion, like volunteering, hobbies like music, and spending time with my family.
How are they preparing to make their dreams come true? Meet Azri Zulfarhan Kamsin, an educator who loves to learn. He's pursuing a part-time master's course in business. Outside of the classroom, he wants to make waves on the high seas.
I love the sea. I love to be out there. My retirement dream is to live and travel on my own personal yacht.
The tiger didn't appear yet, so I think it worked.
Ideally, my retirement age would be around 55. We will not have further financial obligation. By then also, the children will be in their 20s. They have embarked into their own career or maybe their own families. That will be the time for us to retire.
Don't roll,
This is Jiang Junxuan. He's a senior marketing manager at a multinational firm who dreams of having more time on his hands for what he loves best.
I would like to retire by the age of 60. My retirement dream is to have sufficient funds to be able to cover my expenses, pursue my own passion, like volunteering, hobbies like music, and spending time with my family.
And this is Ariel Wee, a freelance media professional. She's used to the bustle of Chinatown, but longs for the serenity of the ocean.
My retirement dream would be to live in a place like Bali, where I can live near the sand and sea every day. I love the people, the culture, the food, the pace of life, and how things can be really simple. Around mid-60s would be a nice time to slow down, just take it easy. Work freelance from time to time and be near the sun, sand and sea.
3 people with 3 very different retirement dreams. What does financial expert Jolene Ong think of Ariel, Azri and Junxuan's retirement dreams?
Every individual will have their own desired retirement plan. It is never a cookie-cutter process. So with these very exciting retirement plans, the big question would then be, are they able to afford those dreams?
According to the National Financial Capability Survey 2021, commissioned by MoneySense, Singapore's National Financial Education Program, slightly more than half of Singapore residents have not developed a plan for retirement savings. Are Azri, Ariel and Junxuan financially prepared to realize their dreams? Azri hopes to sail the world with his wife when his children have all grown up.
So for our retirement, I would think that a sufficient amount every month would be around 500 to 1,000 for myself and my wife to cover our food, our expenses. For the purchase of the yacht, it can be somewhere in the range of $15,000 to $60,000. With regards to the docking fee, it's a few $100 to maybe over a few $1,000. Okay, come.
Before Azri can buy his dream boat, he needs to first clear his debts.
Currently, the financial obligations that I have would be the mortgage loan for the HDB. And the second one will definitely be the car loan. And the last one will be the loan that I took up to pursue my further education.
There are also daily expenses and healthcare insurance for the whole family that he needs to pay for.
The policies that I have would be to cover them against critical illnesses or accident plan. We also took some private integrated shield plans, which basically covers the need for hospitalization in case we do need medical care or there's a medical emergency or a crisis. We do have savings, but it's more focused on the kids' education. A lot of people say that having a large family means having a higher financial strain. But I believe it's all about managing your expectations and also managing your finances. Having a bigger family do encourage myself and my wife to spend more meaningfully and also manage our finances more prudently.
Azri has planned that when he enters into retirement, his wife and himself will probably need $1,000 for their food and daily necessities. So how do we know whether that figure is good to work with? If retirement is another 15, 20 years down the road, the purchasing power of $1,000 today would probably be lower come 20 years down the road. So what Azri can do is make use of some tools that are available, for example, the CPF Retirement Estimator, that can help you to estimate what is the amount of funds you need. On the other hand, there could be other expenses that arise. For example, to fulfill his yacht dream, he will actually have to buffer for the docking fees and other operating expenses. He has to budget it in so that he will not be caught unaware. Now, with regards to insurance, he has to ensure that he has sufficient life coverage so that if anything unforeseen were to happen, his young dependents would continue to have a shelter over their heads until they are financially independent.
As for Jun Xuan, he's looking forward to pursuing his passions and hobbies without having to worry about his income when he retires at age 60. But he has many financial obligations to meet.
Some of the financial obligations that I have in my family are mortgage, my car loan, kids, utilities, groceries, food, and helper. Not forgetting the insurance protection like health insurance, critical illness, term, and disability insurance.
But current concerns are not stopping him from planning for his future.
In order to sustain my retirement lifestyle, I would estimate I will need at least $5,000 per month. The avenue of the retirement funds will be from 3 layers. So my basic fundamental layer will come from my CPF. And this is where I started to top up my CPF SA several years ago. My second layer will be my SRS account, which I'm building this portfolio right now. So the SRS account, one can top up to a maximum of $15,300 for tax relief. And the good thing is I can also use this fund to invest in the index ETF. My last layer will be my cash investments in the bonds and equity market.
I really like his analogy of these 3 layers. So he has actually segregated them into 3 different compartments. In addition to that, what I think is important that he had done is to look at his expenses and project in retirement what is the amount of expenses he needs.
As for Ariel, she's thinking of retiring in Bali in 20 years' time.
My financial responsibilities are my mother, all her bills, myself, all my bills.
Like Jun Xuan, Ariel is well insured.
One of the policies that I have is something that I purchased when I was in my 20s. It's kind of like a life policy. I also have a monthly savings plan, term deposit, hospitalization insurance, which is not cheap. I chose to enhance my MediShield coverage with an integrated Shield plan. I have all the riders, everything. I have an insurance policy that covers critical illnesses. I also have a personal accident plan.
Ariel hopes to accumulate more savings now, but income isn't stable.
Dan Wong is one of Singapore's most successful professional swimmers. As a freelancer, one of the things that you kind of have to contend with is the inconsistency income. Sometimes you have very good months, and then sometimes you have leaner months. It is no wonder...
For Ariel, if she feels that she would like to accumulate more, then she can actually consider maybe a full-time job opportunity within her industry, or she can branch out to other areas. As a freelancer, given the higher level of uncertainty, we recommend for Ariel and make sure that she can at least have 6 months of emergency savings to cover her expenses. Moving on to insurance, so Ariel has the integrated Shield plan and of course the riders as well. Premiums are actually escalating with age. There may come a point that it may be financially prohibitive for Ariel to actually sustain the premiums. She may then make a decision, do I give up my plans? Now, if she were to make that decision, she should not be worried because as Singaporeans, we have our MediShield Life, we also have our CareShield Life. So this will take care of hospitalization and long-term care.
There are many factors to consider when planning for retirement. Which are most important?
We always advocate anchoring the 3 pillars for retirement: a fully paid up home, appropriate and adequate insurance coverage, adequate retirement savings. Once that plan is in place, we can then ask ourselves, how many years do we have to retirement? Because then that will be the runway for us to accumulate the necessary financial resources to live our retirement dreams.
And how are Chun Xuan, Azri and Ariel accumulating the finances for retirement? It's good to start early when planning for retirement. Azri is reaping the benefits of a longer runway to grow his nest egg.
That habit started as early as my schooling days, and I realized that there is an amount that can never be touched, or I would say should be allocated into protection. I have an investment saving account. I do have the means to be able to tap on this resource in an event of emergency. If I don't, by the age of 62, I'm able to at least tap on this as a supplementary source of income.
What is very heartening is the savings habit that he has been enforcing upon himself since young. We will recommend him to do 20% of his savings, if possible, because this will actually build up the emergency savings.
Yes, let's go.
Let's go.
Like Azri, Chun Xuan also started financial planning early.
I started planning for my retirement in my mid-30s. So this is where I use a financial spreadsheet to help me to calculate what is the capital that I need when I retire, and also the rate of return that I need in order to achieve my retirement goals. Before I even start to invest, first of all, I would set aside at least 12 months of emergency cash for the rainy days. So once this amount is set aside, the remaining amount is going to investments. I would never touch my CPF. This is my safety net. The reason is simple. If all my investment goes south, I still have my CPF to rely on for my retirement.
For Chun Xuan, he actually started his retirement planning in his mid-30s, and that's very wise of him because it actually allows him to leverage on the power of compound interest. With a very long runway, he would be able to yield higher interest and accumulate more nest eggs for his retirement. While he has his own spreadsheet, we also suggest that he consider using the retirement estimator that is available on the CPF website, because that can actually show up with the areas that he may have overlooked in his own calculations.
Ariel also started financial planning years ago.
I started with my simple life insurance policy in my 20s. Then I started the monthly savings in my 30s. And then I started to look at how else I can invest and save in my 40s. I'm not the risk-taking type, so I haven't invested in stocks and shares because I don't feel I know enough. I have a fixed deposit, and I also have another policy where I set aside a certain amount for a few years, and then I leave it there and wait till like 20 years and it will accrue interest by then.
For Ariel, if after calculating what she needs for retirement and she realized there is actually a shortfall, I would say she can probably increase the savings ratio to 20% of her income. As she mentioned, she is wary of investment losses. She can consider the Singapore savings bond, even topping up a CPF special account. This will help towards her retirement as well.
The Central Provident Fund, or CPF, is a crucial pillar for retirement planning in addition to savings and investments. There are three main CPF accounts for different needs. The Ordinary Account, or OA, is for housing, insurance and investment. The MediSave Account, or MA, is for healthcare expenses and approved medical insurance. And the Special Account, or SA, is for old age and investment. On reaching the age of 55, the OA and SA savings up to the full retirement sum are transferred to the retirement account to form a retirement sum, which provides monthly payouts during retirement.
There are ways to maximize your CPF savings beyond just working contributions. And one of that is through making cash top-ups or CPF transfers to your special account or your retirement account. The earlier we make top-ups, the longer runway we have to accumulate and benefit from the compounding interest. One tip to share is that if you were to top up in January each year as compared to December yearly, you can get 20% more interest in just 10 years' time. Besides leveraging on CPF interest rates, you can also enjoy tax relief of up to $16,000 when you make cash top-ups to your own and your loved one's retirement savings.
Those who are self-employed can also enjoy tax relief when they make contributions to their CPF accounts, and this includes their mandatory contributions to their MediSave account. From age 65, Singaporeans can look forward to receiving payouts from the CPF Lifelong Income for the Elderly, or CPF LIFE. This National Longevity Insurance Annuity Scheme enables Singaporeans to lead a worry-free retirement.
With increasing advances in technology and healthcare, we are likely to live longer. We run the risk of underestimating our lifespan and depleting our retirement savings. CPF Life addresses this uncertainty because it provides us with a monthly payout no matter how long we live to. There are CPF Life plans for you to choose from, and deciding which plan is dependent on how willing you are to adjust your retirement lifestyle when prices increase in future. The CPF Life escalating plan, which provides a monthly payout that increases at 2% yearly, will allow us to maintain our retirement lifestyle as prices increase in future. The standard plan provides you with a level monthly payout. However, what this means is that when prices increase in future, you have to lower your lifestyle and buy less things. Regardless of the CPF Life plan that you choose to be covered under, you are able to start your monthly payout anytime between 65 and 70.
Azri, who has been topping up his special account, estimates that he will receive more than $1,000 per month from the CPF Life standard plan when he retires.
Hopefully, the CPF Life payout will be able to support the amount every month that we need for food, for expenses.
As for Ariel and Chun Xuan,
So as far as the CPF full retirement sum is concerned, I've actually reached that a couple of years back. And that's because I started topping up early in my mid-30s. I will depend on my CPF Life payout to fund my retirement. Hopefully, I can delay this until 70 to benefit more from the compounding interest.
I would say that it would be a source of comfort, knowing that when you reach a certain age, you have something coming in every month.
Let's put it at 2,500 to 3,000. Looks like it at about maybe 3,000.
To find out more about CPF Life and retirement planning, Ariel and Chun Xuan attended a free public workshop organized by MoneySense.
To show you if you
It provides a holistic overview on the various retirement instruments that I can tap on. And it also hits on some of the blind spots that I did not manage to cover. For example, supplementing retirement funds through housing.
Here, it will give me a quick snapshot of your finances.
I found the retirement planning session helpful. They went through case studies, examples, and all that really helps you to picture yourself, visualize, and think of what you need to do to plan ahead.
Yes.
Both CPF and CPF Life are specially designed to help Singaporeans secure their retirement.
Singaporeans need to save towards our retirement. But at the same time, inflation can actually rob us of some of our savings. While we know that investment can help to override inflation, we then become worried about investment losses. This is where CPF can come in as a tool to help mitigate inflation as well as investment risk. Being guaranteed by the government, it is risk-free.
Thank you.
While some may say that with CPF, we actually lose the usage of funds right now, but remember, you are saving towards your retirement, and putting aside some funds now allows you to live the ideal retirement lifestyle. You need to be kind to your present self, but you also need to be fair to your future self.
One of the things I do look out for is to be debt-free by the time I retire. Hopefully at the age of 55, I will also be able to spend more time with my wife, do the things that you enjoy.
I would say that the main considerations when you retire would definitely be the cost of living. Would you be able to still afford the same standard of living that you have now? If I can maintain that, that would be perfect.
To retire smart and well, I will continue to save and invest, get out of debt, have proper insurance coverage, and earn more, spend less.